Good morning, traders, and welcome to the Private Traders Morning Show. My name is Charles. Today I'm joined by Paul. How's it going, Paul?
It's going great. How about you?
I'm doing good. All right, well, I am going to jump right into the TA today, but before I do, there is a survey up in the chat asking, where do you think the market is going to go today? Do you think we're going up? Do you think we're going down? Or do you think we're going nowhere? We're just going to go sideways all day today. Jump in there real quick. Let us know what you think. Are we going to go up, higher, lower, or sideways? And then we'll close it out, and then I'll do my TA. So we're doing a little countdown here. I'll give you 5 seconds to vote.
I cast my sad vote already.
What is it? What was your vote?
Sideways.
Okay. So anyone else who wants to make a vote, it's now or never. Finishing the survey in 3, 2, 1. Okay, let's see what people think. The results are in. 47% think the market is going higher, 36% think the market is going sideways, and 15% think the market is going to go lower. Also, most of you voted. That's cool. All right.
Now they just need to give us the thumbs up thing, right?
Yeah, now we just need the likes. Only half of you have done that. I don't know what the story is there. You guys don't like me or you don't like Paul? Which of us is it?
I don't know, Charles. I'm pretty likable. So
that is my opinion anyway, but you know, the chat. All right. Yeah. So let's jump into TA. So my thesis for today is that the market is going sideways. Okay. I believe that the market is in balance right now on a daily time frame, meaning over a certain number of days, the market is essentially going to go sideways. Now, it will go up and down throughout those days, but in the end, it is essentially going sideways. I also think that the market is balanced by a pin. So essentially, there's 2 different ways we traditionally think about balance, okay? One way would be to say we're in a balance area and we're going to go from the high to the low to the high to the low to the high to the low, back and forth. If we are in a regular balance area, generally the way that will end is we will get above a balance area high and then reverse back, which will launch us to the opposite end. We'll get below a balance area low and reverse back, which will launch us to the other end. However, what has become much more common in the markets over the last year is what we call balance by pin, which is basically when the market picks a level and anytime the market tries to get away from it, it just pulls it back. Okay. My reason for thinking this is a balance by pin instead of a traditional balance area, whilst technically it could be either right now, right? We have no clue. It could be one or the other. We know for sure the market is balancing. Why? Because 2 days ago, we had lower highs and lower lows with value lower, which told us the momentum up was over. And then we had higher lows and higher highs yesterday with value higher. Okay? So that shows us that there is no clear momentum up or down. And then also all 3 of these days, the market profile gave us a bell-shaped curve. So on a daily time frame, the market has gone nowhere. It went up, then down, then up. And intraday, it's been going nowhere, up and down and up. The reason I think it's pinned, when the market is pinned, you start to get a lot of areas that line up with each other. So this is opening prices, closing prices, and points of control will often line up with each other. So if we just look at the last 3 days, Friday, opening price and closing price, exactly the same. Point of control, exactly the same. On Monday, opening and closing price within a few points of each other. Yesterday, opening and closing price within a few points of each other. All right, when we look at the POC from the overnight on Thursday night going into Friday, POC over the weekend, POC last night, POC from yesterday, all perfectly lined up here, one after another. This type of exactness in the market, where the market is just basically having these very perfect exact ranges, generally happens when the machines are artificially keeping the market pinned to a certain area. So if I had to pick that level for the ES, I would say it is this large cumulative node right here around 5770. That is what I would call the pin. I think the same behavior is happening on the NQ, and I would call that pin around 20,070. Okay, so both markets, I believe, are pinned right now.
And it's howable. I was dying yesterday waiting for a trade.
Yeah, well, when you get used to a lot of volatility, when the market gives you a bunch of crazy volatile days and then it gives you a nothing day, it's very depressing. But yeah, there were a bunch of bot reversal trades at the very end of yesterday, but that's another story. So if the market is in balance today, either the traditional balance or balance by pin, what are the most likely scenarios to play out? Well, first and foremost, the highest probability scenario is that we are heading back up on the ES to the all-time high. We're heading back up to 57.97. Okay. If the market wants to break out of balance, it's first got to get above that high. If it wants to fail and reverse back down towards the low, it's first got to get to that high. So to me, the highest probability is that that is where we are going today. What would it look like if the market were to go there? First, we would find buyers. We would find support at yesterday's high, which is where the price currently is, 57.84. Then we would be able to get above the overnight high. The overnight high is so close to that all-time high, there would definitely be a little short covering and we'd get above there. Okay. So if we can find support on yesterday's high, bullish to test the all-time high, not bullish beyond it. I could very easily see the market makes a little pop and then comes right back down. Okay. So I'd have to definitely see new buying and momentum in the TA to trust that the market is going to continue higher above the all-time high. Okay. What are the other scenarios that could play out today? Well, if the market were to push its way below the overnight low and get new selling there, I suspect we would come down to test the overnight low from 2 nights ago. Okay. Which is around 57.40. That to me would be the balance to the downside. Once it gets there, we may get resistance at that low and continuation lower down to 57.33, or we may pull right back up. That is what is tricky about a pin. A pin doesn't need us to get all the way to one end or another. The other tricky thing is the pin increases the odds that we maybe have a nothing day, a day where maybe we poke above yesterday's high. We can't turn it into support. So then we sell off down below yesterday's low and then we reverse right back up again. And we get basically an engulfing day that is bigger than yesterday's range, but does the exact same thing and just goes sideways all day. So unfortunately, all three of those scenarios are possible today. Market going higher, market going lower, or market just going sideways. But even if the market goes higher or lower, I would need to absolutely be convinced it can keep going. Otherwise, I would assume we're coming right back to 57.70. Okay. By the end of the day, whichever direction it breaks, it'll come back. So don't fall in love with trades.
So, and if you were to pull up the NQ for a second,
okay,
you would see that it is just bouncing off of 20,020. Just boing, boing, boing.
Yeah, I mean it's insane. Yeah, if you look at it right there, look at the support stepping in, support stepping in, support stepping in, support stepping in. So yeah, I mean that's to me probably has more to do with 20.015 or 20.012, this large node right here, and them not wanting to break below it because they may liquidate the market lower. But yeah, both markets are just a mess.
I would say probably not from an absolute technical perspective, but from an emotional perspective, the people trading that are bouncing off of 20,000 and they're just putting in a ratio trade when they're covering. So for them, they can cover, they can, if they defend 20,020, they're just, they're whatever, they're selling calls and buying, or selling calls and buying the contracts right there, buying the futures contract at a ratio that protects 20,000, as opposed to really 20,020 or 20,015 is not what's dear to me. But I think the guys that are working this from that at that level are really emotionally at 20,000, even if they're technically executing it at 20,015.
Yeah, and I could say same thesis, but it's not the guys that are emotional that are doing it. It's the people buying those calls. They're buying calls with strike prices above 20,000, and it's a machine that's doing the calculation and going, we have more risk if the market goes above this level or below this level, and then they hedge.
Right.
So yeah, that's why it's so mechanical. It's a very exact thing. And the reason it happens at exact levels is because that's how the options market works. Strike prices are exact levels. And so the market defends exact levels. So looking at the NQ real quick, as far as TA is concerned, if they can get above the overnight high, they technically could break away from this balance. Okay. They could start to get some serious momentum to the upside. I would look for resistance in this node right here around 20,230. I would look for resistance there, and it will probably get smacked back down. If they break through that resistance and keep going, it may be a breakout of balance. Okay. Remember, the ES is sitting at all-time highs. So you got to really, really be bullish if you're willing to buy the all-time highs, but the NQ is not. So if the NQ is
the NQ all-time is closer to 21,000, isn't it?
Yeah. So exactly. Yeah. It's 29.16. So, the NQ, a trader could feel more confident longing the NQ here, knowing they still have a long way to get to the all-time highs. So if either one of the markets is going to break out of balance first, my guess is it would be the NQ before the ES. So there's that. Paul, do you have any news for us today?
There is not news. That's all I can tell you for sure. I mean, I'm just piddling little things to comment on, but there's slight news out of China, and which is basically that they're continuing to stimulate their market while the rest of us, have not really worried about it. But it's just they have just I don't know. I think China overall is sputtering, and they just have not really gotten their mojo back. So I don't know. I've continued to mumble and worry about China, but that's not tradable. I was going to ask you to take a look at your oil trade.
Yeah, what's happening with oil? Let's do it.
You're looking pretty smart.
Am I a genius on oil? I should have actually entered a trade instead of just theorizing a good entry level. Would you look at that?
Yeah, Charles, I think you're pretty good there.
Yeah, I mean, I was a little early. I was expecting the bounce a little bit early, but yeah, that's exactly what I thought. And so I still remain my thesis. We're heading up to test that downtrend line around 73. And
Very
that
cool.
is where the big boys will be paying attention. That's where the people that buy oil for, making products and stuff like that will start looking at it and thinking, do they want to stop buying?
Yeah.
But yeah, got the bounce.
So the other thing I was going to ask you about yesterday in your live stream, in your course, you were talking about your evolution as a trader and how you kind of gone from one type of trader to another. And it's just, if you've got a minute or two or 45 or whatever it is you need to discuss that'd be great.
Yeah, I do need 45 minutes to cover it. Yeah, thank you for bringing it up. It's a great topic. So one of the things that I've been talking about in the course is that I think a lot of people have the wrong idea about trading. Whether you're talking about day trading or even swing trading, I think a lot of people have the wrong idea where they think being a trader, like becoming a successful trader, is like becoming a doctor or a lawyer or something like that. Like you just have to finish your course load. You just have to learn what you have to learn. And then you're a successful lawyer or doctor and you can just make money for the rest of your life. Trading isn't like that. Trading is much more of a performative thing. So it's like being a professional athlete or being a musician or an artist or, something along those lines where you don't just have to learn how to trade. Just like a football player doesn't just have to learn how to play football and then he gets to play in the NFL for the rest of his life. You have to show up every day and deliver excellence. You have to show up every day and work yourself to the bone. You also have to be able to constantly adapt and change because the nature of markets, the reason markets work, the reason anyone is able to make money in markets is that they find things that are little opportunities and they take advantage of those little opportunities. But inherently, the more people that recognize an opportunity and start to take advantage of it, the more that opportunity will stop working. And so the nature of the market, of being successful in this business, is constantly hunting out those new opportunities and figuring out what is working right now and what is not working anymore, and adjusting your, style to it. So what I was talking about in the workshop was, if I were to go back and look at the way I was trading, actually choosing to enter and exit trades back in 2020, it was completely different than the way I was doing it in 2022, which is completely different than the way I'm doing it now. And of course, my skills have improved. The complexity of my understanding of the market and how to take advantage of it has, just improved over time, like it would with anyone. But also I have been consistently, intentionally changing my approach to the markets as soon as things stop working. So if I'm, for example, taking lots of trades with very tight stops and I'm making good profits, maybe most of the trades I get stopped out, but the ones that work, I make a huge profit and it's worth it. That's the way I was trading back in like 2022, was like every trade had 3 points of risk or 4 points of risk, like very, very tight trades. But when they worked, I was making 20, 30, 40 points of reward. And so I didn't need that many of the trades to work in order to be profitable. But that trading does not work right now today. If you tried to take trades with 4 points of risk, you would get stopped out like every time. And even when you're in the winning trade, you wouldn't get a 30 or 40 point move, because the market starts to make a move and then it reverses and it dips down and then it makes the 30 point move. So you'll end up getting stopped out of like every what would be a big winning trade. So I've had to adjust to that. I've had to switch from taking trades with very, very little risk, where I'm kind of taking a lot of trades and looking to just be in a big winner every now and again, to being much more cautious with my trades, taking way fewer trades and being able to sit through a lot more volatility. Being able to either wait, instead of entering at a support level, waiting for it to break, waiting for it to come back up again and then getting in, or using options to enter a trade, where instead of going long a futures contract when I think the market is going to go up, I just buy a call. And that way, if it starts dipping down, I can either hedge that position with a short in the futures, or I can just wait it out. I can say, okay, maybe it's going to dip for the next few hours, but by the end of the day, we'll be back up above my strike price, And I didn't have to do that in 2022 or 2020. There were so many opportunities that were easier to just take trades in the futures that were very simple, but the futures have gotten so complex. The intraday volatility has gotten so complex that those opportunities are gone. The flip side of that coin, I've got a trade setup that I use a lot right now called a bot reversal trade, which, like I say, is where you literally risk like 1 point to make like 8 points or 10 points. And those never used to exist. Those literally did not exist 4 years ago, because the markets were not as driven by computers back then. It was much more humans, and humans don't all enter trades at exactly the same level at exactly the same moment. So there was much less consistency, ironically, than there is now. So if nowadays I can know it's a bot driven market, like yesterday, right? Like I predict today will be, if I know it's going to be a bot driven market, I can know they're going to reverse at exact levels. And then that gives me opportunities that didn't exist a few years ago. So yeah, it's a great question, Paul.
Cool. So would you think that then where would you see it evolving from here? If you think about reversal works right now, how would you go about forecasting what will work in a year or two? Or what would you do to try to get ahead of that?
Yeah, so here's the answer. I can't forecast what it'll be a year from now, but what I will know is when the bot reversals stop working, right? Mm-hmm. When they start coming up to that exact level, bouncing just a little bit, and then out of nowhere, sweeping the order books and then making the move. When I start to see that happen all the time, it happened yesterday. It happened again today. It happens again tomorrow. It happens again the next day. I start to notice over and over again, they keep sweeping the order books right at my bot reversal trades. You know what I'll do? Stop taking bot reversal trades. And I will start saying to myself, okay, how can I now handle the sweep of the order books right there? What's the way to enter the trade knowing that they're not going to reverse at the exact level. They're going to make it look like they're going to reverse at the exact level, and then they're going to sweep for 3 points and then reverse,
Right.
So I can't.
I see those sweeps a lot more often in the NQ.
Yeah.
I mean,
Also,
NQ will sweep 20, 25 points in 15 seconds.
Yeah. Another random thing, often changes that happen in the NQ first happen in the ES later. So generally, if like you start seeing a weird behavior in the NQ, a few months later, you'll start seeing it in the ES. It's like they practice, they like build out things on the NQ. And then once they've got the algorithm set up, they start using it on the ES. It's crazy. But yeah, and so I can't predict ahead of time when things will change. I definitely cannot predict what those changes will be. But in real time, I'm willing to admit when something isn't working anymore and immediately start looking for solutions to adjust to it. And just naturally, over the years, I'm changing. Now, the shitty part about this is I have drawdowns. I have periods of time where the market stops doing whatever behavior it's been doing for the last 3 months, and it starts doing something new. And it takes me a couple of weeks of like taking on losses to figure out, oh shit, this isn't working anymore, and then make those adjustments. So I've also had to build a resilience for those drawdown periods into my, package of being a successful trader. Is like, I also have to accept that sometimes the thing that's been working great for 3 months and I've been printing money doing this thing will just suddenly stop working. And then it's going to take me a while to figure it out. And I'm going to lose during that time, but I can't lose confidence in my ability to figure it out,
Cool.
There we go.
Okay.
So I don't know if that was helpful to anyone out there. If it was, please let us know in the chat. And I hope I didn't make anyone depressed. I know people, sometimes during my workshops, I get emails from people who are like, hey man, you make it sound like it's impossible to be a professional trader. And I'm not saying that at all. I'm not saying it's impossible. I'm just saying if you walked up to me and said, I want to be a professional football player, I would want to pull you aside and say, okay, are you sure you're willing to do everything it's going to take to perform at the level to be good enough to play in the NFL? Like, right. And as long as you're willing, I would encourage you to try, so that's the way I feel about trading.
Yeah, I kind of agree.
All right. Well, with that, we will wrap it up for the day, Paul.
Okay.
Thank you kindly.
All right. Thank you.
Have a good day, everyone.
Y'all too. Y'all have